Michelle Schneider, Chief Strategist for Market Gauge Group, joins us now. Good morning, Michelle. How are you doing today?
Great, Ryan. How are you?
I'm doing great, Mish. So great to have you on because there is so much to unpack, and I suppose we have to start with what's going on with NVIDIA. We are going to be getting the earnings out later tonight, so it does look like a lot is being priced in terms of expectations.
It is such a marvelous situation, really, because if you think about a little bit of just recent history in NVIDIA, in the October quarter, it beat expectations by $1.9 billion. And then in January, it beat by $1.7 billion. So now the expectation is for it to top $24.6 billion in April. So that's a very high bar. So now you have to say, if it doesn't meet that bar, what happens? That doesn't necessarily mean the stock is finished, but certainly you will see a lot of longs liquidate. And even if it does beat the bar or match the bar, you have to ask how much more upside, right? So there have been projections of 1,050. It closed at around 947 today. 1,050, I've seen that. I've seen 1,100. I've seen as high as 1,200. So it always comes down to, if you're in the stock already, great. If you're waiting in anticipation for this report and you're going to pay up, you have to ask yourself, at what point does it have to correct because it's overvalued? Now, on that case, though, Ryan, there are many analysts who feel if you look at the PE ratios, NVIDIA is nowhere near overvalued and does have an incredible future. So it's amazing, really, when you think about that versus the rest of the stock market right now.
Yeah, so we've got NVIDIA in the past year up over 200%. So it is on a good run. And I suppose questions are not being asked. How much more can it go? And on a portfolio basis, should you then start to figure out whether you should rotate to other sectors? What are you seeing right now, Mish?
Well, I just finished that point. Stanley Druckenmiller, billionaire hedge fund operator, he actually sold all his NVIDIA last week for exactly the reason you just said. Great run, let me get out and look elsewhere. And he put his money into the small caps. So let's talk about what my wheelhouse has been since you and I have talked over the last several months or a year. Commodities, right? So you've also had gold make a new all-time high, silver pop to $32 an ounce, copper go ballistic to all-time highs. On top of that, you're seeing now a run in uranium futures. Natural gas looks like it's bottom. And crude oil hasn't done much yet, but it's very possible that if that makes a move back over 80, 81, what the conversation will turn back to after a softer CPI last week is inflation going into a super cycle. And that's still what I am watching for, given the fact that in the West, lots of hedge funds are still very underinvested in gold. And right now, the fundamentals are pointing towards a much higher demand, not just in the precious metals, but in all of the industrial metals right now and in uranium.
Yeah, we've got a lot of interest flowing into metals right now. I'm also looking at the earnings season, and by and large, we've seen quite a good beat on many of the companies. Target just announced is going to be announcing its earnings, and it has announced already it's going to be cutting prices on 5,000 items as a bit of a bid to try to revive its fortunes, bring in the crowds again because people are just not spending enough, especially those who are financially strapped. So is this a reflection, Mish, of how much inventory or even margin concerns there is in the retail industry?
Absolutely. And if you take a look at the retail sector, although you had a company like Abercrombie & Fitch make new all-time highs today, you are seeing some pressure not just with Target, but even in terms of the food industry. You have McDonald's now offering a $5 meal, Wendy's talking about a $3 meal. So the trend really right now is that although consumers apparently have disposable income, they're cutting back tremendously. And that is why the money going into tech is one thing, but it's been coming out of the retail space, even in the consumer staple space, and coming out of the transportation sector as well, which I think is concerning and something to keep your eye on because it could smack of stagflation coming.
Right, so slowing growth with no, I suppose, with inflation still being an issue.
Absolutely, because we saw prices are going up. They're going up all over the place, even in the manufacturing numbers. Although manufacturing has shrunk, the costs have gone up. All of that, you're seeing that as a trend all over the place because there are certain things that are just persistently high, and you can come up with a bunch of reasons why, but at this point, what really matters is, will that be a trend to continue, slowing growth, rising prices, stagflation, and what does that mean even for the incredible AI stocks? I mean, at some point, will automation take over and bring prices down? Yeah, but how many years away are we from that?
All right, Mish, you've got a couple of picks in terms of what you are favoring right now in the markets, and I've got my eye on Coinbase, which is up 8% at least in the last session, and over the past year up over 260%. So it's a bit of a play on crypto right now. Is that the way to look at it?
Yes, well, there's a couple of things. And yes, Coinbase, we had a spectacular run from 80 up to about 280, and then it came all the way down to around 190, held 200 last week and closed today at 223. Now, there was an announcement that it's 80% certain that there will be an Ethereum ETF, so that partly helped. Bitcoin topped 70,000. That helped. And there was an incredible amount of volume coming into the cryptocurrency space today. So all of this has reignited that stock. And we do believe that even though gold and silver are getting all the attention now in terms of inflationary plays, at some point, Bitcoin will start to prove itself again as an asset that people want, a store of value, even though that may not be the most mainstream opinion right now.
Mish, talking about proving itself again, Alibaba had earnings recently, which did not seem to impress investors enough, and it also included an 86% plunge in its fourth quarter net income. So what do you make of the latest around Alibaba? How much does that reflect the Chinese consumer?
Well, China has done a lot to stimulate the economy over the last few weeks, and you've gotten some really big names again in the States coming out in support of how undervalued stocks are, like JD.com and Alibaba are, and the whole China economy, like Michael Burry, for example, would be one, Tepper would be another. And so we had already anticipated that it was possible Alibaba was undervalued and started accumulating it at $69. Then read Jack Ma was buying it down there as well. And now it's trying to find, after the earnings, and it was a beat, but it wasn't as explosive as one would think. But there's still so much bullish sentiment that if it can get through this $90 area, that it could easily see 100, 120 and on. And this is in the face of the U.S. threatening all of these tariffs. So it does seem like China has worked its way through this, and it's possible if these big fund managers like Burry and Tepper are correct, that this could be just the beginning of a lot of Chinese stocks going much higher.
Yeah, very interesting picks, Coinbase and Alibaba. And of course, look at how markets have been playing out. We've been in conversation with Michelle Schneider. She is the Chief Strategist for Market Gauge Group. Michelle, it's always great having you on the show. Thank you for your time and insights.
Thank you so much for having me, Ryan.
All right, we'll catch up with you again, Michelle. Stay Money FM.